Hello and welcome to this week's edition of Echo45 Advisors Market and Economic Update. In this video, we'll discuss what drove markets in January, a month that saw both new record highs and some periods of volatility. Despite headlines about geopolitical tensions around Venezuela and Greenland, as well as news around Federal Reserve policy, stocks and bonds posted positive returns for the month. The S&P 500 gained 1.4% and briefly crossed the $7,000 mark for the first time. International markets performed even better, with developed markets up 5.2% and emerging markets gaining 8.8% on a dollar basis. In contrast, gold and silver prices reversed after significant rallies, which we'll discuss in more detail shortly. For long-term investors, January serves as a valuable reminder that while headlines can move markets in unpredictable ways, fundamentals and long-term planning are what matter most. Let's start with what caused the volatility this past month. Early in the month, a U.S. operation in Venezuela captured Nicolas Maduro. While this centered around narco-terrorism, much of the conversation quickly turned to oil, since Venezuela holds the world's largest proven oil reserves. Concerns rose further over U.S. statements regarding the purchase of Greenland. This also sparked potential tariffs against NATO countries. Fortunately, both of these geopolitical concerns de-escalated quickly, allowing markets to recover. So, while history shows that geopolitical events may drive short-term uncertainty, their effects on markets and the economy are often overstated. This chart shows that many asset classes have performed well so far this year, including stocks across regions. Now, let's turn to what happened with precious metals and the dollar. Gold and silver experienced dramatic moves in January. Gold rose to nearly $5,600 on an intraday basis, while silver exceeded $120 per ounce before both sold off sharply on the final day of the month. These moves have been driven by what's called the debasement trade, or the idea that fiscal and monetary policies that weaken the dollar may strengthen precious metals. Fed uncertainty, including whether a new Fed chair might push interest rates lower, drove these metals higher. However, on January 30th, President Trump announced his intention to nominate Kevin Warsh as the next Fed chair, once Jerome Powell's term ends in mid-May. This shifted expectations about a smooth transition between Fed chairs, leading to a plunge in both gold and silver. This reversal demonstrates how quickly markets can shift based on policy expectations. It underscores why precious metals should be viewed as just one part of a broader portfolio. Finally, it's important to note that earnings have been strong, supporting both the stock market and portfolios. According to FactSet data, 75% of S&P 500 companies that have reported fourth quarter results have beaten expectations. If these trends continue, large public companies could achieve earnings growth of nearly 12% for the quarter. Many investors are focused on AI and technology earnings since these stocks have contributed significantly to the stock market return. At the same time, many other sectors have benefited from broad economic growth and have grown their earnings at faster rates as well. For long-term investors, the underlying message is positive. Corporate profitability remains strong across many sectors, supporting stock valuations. This fundamental strength is one reason major indices remained positive during the volatility in January. We hope you found these insights helpful. If you'd like to learn more about any of these topics or how they relate to your personal financial plan, please don't hesitate to reach out. We look forward to speaking with you.